A lot of people have asked me, Kamar, why the stock market? Why Tesla? So a couple things. In the community where I grew up, it was gambling, it was the lottery, and it was susus, right? You know, People want to get rich quick. They don't necessarily understand investing, but so let me try to gamble. Whether it's casino, whether it's a street corner, whether it's someone's house, whether it's online, or let me invest in this susu. A couple friends get together, and if you're the first one in, you win. If you're the last one in, you probably lose, right? As I started to study, I started to kind of get into the stock market. I read Snowball, by Warren Buffett. And then I read Benjamin Graham's book, who is probably Warren Buffett's number one mentor, The Intelligent Investor. And then I read Uncommon Profit, Common Stocks and Uncommon Profits, right? And, as I, kind of read those books, I started to understand, PE ratios, dividends, right? Kind of the different ways that you could build wealth with stocks, right? You can short a stock. You can invest for the long term. You can invest for the long term from a dividend aspect, but you can also invest for the long term from a growth aspect, which, dividend would be more like a Coca-Cola stock. Growth would be more of an Amazon, right? So I buy it at a price here and I expect, year over year for that price to raise, which increases my investment. A dividend stock, I'm not necessarily concerned about the price too much, but each time I buy a share, that share pays me a certain percentage yearly, and that dividend is usually paid out quarterly. And each time those dividends are paid out, I get to reinvest those dividends into more stock. And that's kind of how you get the snowball, right? So, of course, I started out with more of a Buffett model. Let me get Coca-Cola, let me get Wells Fargo. These companies that pay, what I would call substantial dividends. Price isn't going to move that much, so my money's safe, and I just have to keep accumulating money to invest. And each time I invest, that ensures another dividend, and that rolls over. And over time, I will start to build wealth. But I'm starting somewhat later in life. I believe Buffett started somewhere between 16 and 18. I'm in my 40s, right? So I said I need a little bit more speed, which caused me to move to a Google, right? Apple, a little bit of Microsoft. And, one day, I'm looking at this Tesla, my fiance is telling me, her cousin just bought a Tesla, and I'm hearing more about it. I'm watching it on my watch board, and I see it with these gigantic moves, and I start to really consider buying it. And what happens is Steve Eisman from The Great Big Short, he's shorting Tesla. And I have a great respect for Eisman and a great respect for Michael Burry from that movie. Not only did I watch the movie, but I also read the book. So I can't go all in with Tesla because I know that Eisman's shorting it. I know that Eisman's been successful with The Great Big Short. I like how his mind works. I'm going to lean towards Eisman. I'm not going to invest in Tesla. Tesla continues to rise. The pandemic hits, and maybe last week of February 2020, first week of March 2020, Tesla plummets to 350. My first thought is, Tesla was just trading at around 835, 950. It's going to go back up. This is just a dip. I've learned about this from Buffett. Mr. Market is panicking. Mr. Market is a term that Buffett used or coined that basically is when the market kind of does stuff maybe just on news, right? So news comes out, the price drops, but it doesn't really depict the true value of the company. That's Mr. Market overreacting. It's an opportunity for you to buy. Some news comes out and the stock price rises. Now that price is higher than what the real valuation of the company is. Mr. Market has overreacted to that degree, right? So I felt like the pandemic drop was more of a Mr. Market. I always bet on America. I feel like we're going to continue to be successful. We're always going to figure things out. So I'm like, this is maybe an opportunity. Tesla will most likely get back to the 850, 950. But I've still got Eisman in the back of my mind saying that, it's going to go down. The valuation is overvalued. So I don't buy the stock. Sure enough, the stock goes back to 750, 850, 950. Talking to one of my close friends, I'm telling him like, man, I really like Tesla, but Eisman's shorting the stock. It's trading at about, nine something a share right now, and they don't have any profit. And literally, he says, so the stock is trading for almost $1,000 a share and they're not making any money. And literally, as he says it, the screws start turning in my head. And I'm like, imagine what the price will be once they start making money. Literally, I get off the phone call, I sell shares of Google, Microsoft, I throw everything into Tesla. From that point, all I have done is investigate, study, do due diligence, right? What is their business model? What are they doing, right? What's their chance of success? What is their vision, right? Why is everybody undervaluing them? It's simple. Everyone looks at them as an automobile company. They're not. They're an energy company, right? And Chamath says this a lot, Chamath Palihapitiya, but I don't think you have to be a rocket science to realize that, right? They're an energy company. They use batteries for the vehicles, but they also have solar for the houses. There's an opportunity at HVAC. I mean, Elon Musk said himself that Tesla is literally 12 different startups in one. So for me, the decision became easy because I said, everything that people are saying about Tesla, they said about Amazon. At one point it was $19 a share. It went up to about 300. I think in 2001, it dipped back down. I actually had a cousin that bought Amazon at $19 a share in 2001, right? And now, if you take Amazon no splits, then it would be trading for about $21,000 a share right now, right? Take Apple, no splits. It would be trading for $27,000 a share right now. That first share would have cost you $21, right? So when I think of Tesla, I say, okay, Apple 26, 27,000. I say Amazon 21, 22,000. I believe Tesla at that point in their cycle or their life cycle will be 30, 35,000 a share from that one share that never was split adjusted. So at this point, a $4,000 price tag on Tesla right now, I'm getting a bargain. So yes, I'm buying as much of Tesla as I possibly can. They're going to sell 20 million vehicles in 2030. They're already at 500,000 in 2020. And Elon made that prediction in 2014 with no knowledge of it being a pandemic. Most of us Tesla bulls believe that we'll sell 1 million vehicles in 2021. But if we only grow by 50%, and that's 750 million vehicles, then the next year after that, you're talking about 1.1 million vehicles. After that, you're talking about 1.6, 1.7. And even if you're just growing at 50%, you still end up at close to 10 million vehicles in 2030. But what do we know about innovation? It always is exponential. It's always faster than you think. That's why we're building the gigafactories. That's why Elon talks about maximum efficiency with the factories, the machine that builds the machine, that builds the machine. And then you take those 10 million vehicles in 2030, and then you put autonomous driving in each of them. You put an app store in each of them, right? And at this moment, we have not even talked about Tesla Energy, not to mention the opportunity for Elon Musk to create Musk Enterprises, which means if he puts SpaceX, Neuralink, Boring, Tesla, all under the same umbrella, you mean to tell me you don't want to be a part of that?
This is coming from a Dave Lee tweet. Most of you remember he was on the channel about a week and a half ago. Late last night, he tweeted, quote, "I propose Elon Musk to form a holding company called X. X's mission is to ensure human survival and progress. X becomes parent company of Tesla, SpaceX, Neuralink, and Boring Company. Elon, what do you think?" End quote. Earlier today, Elon then replied, "Good idea." So, certainly not the first time we've heard suggestions like this. Elon Musk, draws some comparisons at times to Tony Stark in Iron Man. Elon actually even appeared in one of those films. And of course, Tony Stark has Stark Industries, so therefore, maybe Elon Musk should have Musk Industries.
Thank you for joining. If you're still listening, you are phenomenal. This is the second episode of the ALSET podcast/video blog. Remember, always reach for the best within you. Until next time.